Let's talk about the holiday season because, well, tariffs hurt this holiday season. It is already the end of August. Actually, next week is September. And before you know it, you'll be thinking about putting out the Christmas lights and decorating your home. Well, for the past few years, we have seen growth in holiday sales. And again, I want to point out sales. That's important. But this year could be different as it appears from recent conference calls from the CEOs at Walmart, Home Depot, and Target that they're seeing the tariff increases starting to come through. And what we have to look at, retail sales, there's no such thing as retail profits, but I think that's where the problem is going to be.
Yeah, and I mean, kind of using the example of the Walmart CEO, he did say on the conference call that the impact of tariffs has been gradually increasing to protect the consumer. But he also said that the company is seeing cost increases each week as it rebuilds inventories with new products post-tariff. Very important because, when we are initially kind of looking at these tariffs, companies built up their inventories, they were working through prior inventories, and now they're like, oh, shoot, maybe these tariffs lasted longer than we thought. Now they are having to kind of deal with the tariffs as that inventory runs dry. He also did mention that they may not be able to protect the consumer from rising prices much longer.
And again, what worries us is that inventory, as you said, it's kind of dying down. By the time you start shopping for holidays, the tariffs could be at full tilt because all that inventory is gone. And I remember, too, the holiday sales, the products, they're usually shipped in August. And that's when they get to the, October, November, and so forth. Well, what happened in August? Tariffs were there already.
Yeah.
So be prepared for higher prices on holiday goods. But what's also bad about this is retail sales may rise, but consumers will receive less product to put under that Christmas tree. And considering sales are not adjusted for inflation, this could be delayed inflation that Jerome Powell and the Federal Reserve has been waiting for. And unfortunately, it may show up when people begin shopping for Christmas gifts. Maybe there should not be an interest rate cut in September after all. And I know you kind of think there should be. You're kind of...
No.
No, you don't? What do you...
I said I think they will.
You think they will? Okay.
Yeah.
Right.
I think...
I don't know why he will, because he's going to March anyways. Why cave?
I think it's because if the market prices it in at 90%, that will be a shock to the market.
Right.
And why the market? I mean, that's the question. Should they follow the market? I mean, you're supposed to be independent, but I think they will. And, I've been, I think, pretty vocal that I thought that we should cut rates. And I think I had a little bit of, self-fulfilling bias in this. I have my mortgage and I'm like, it'd be great to be able to reduce my rate. We also do have, a flooring company in the portfolio that would benefit from that. So, I mean, we have some assets that I think would benefit from a rate cut. But again, we're long-term investors. I don't need the rate cut tomorrow. If it happens next year, even I'd be fine with it. But I have started to maybe question that. Do we need rate cuts? I mean, I don't know. I mean, do we really know the impact of tariffs? And I still want to emphasize the point. I don't think they're going to be as bad. Inflation is not going down, I don't think, 5%. No. But I don't think the tariffs are going to allow us to get down to 2%. So do we need to cut rates in September? I don't know. I mean, I think we could wait until next year, and it's not going to, I don't think, change things long term. But the problem is people are so short-sighted.
And also, too, last week we talked about 3 data points coming out of PCE, which came out Friday. 2.9%, well away from the 2% target they want. We still have the CPI and the jobs report coming out before they meet again. So if those don't come in well, and again, if the jobs report comes in very good, that's a problem. Yeah. CPI comes in higher, that's a problem. I really hope that Powell listens to the data and doesn't cave. And if the market does, why are we sitting on 25% in cash in the portfolio? Because we're prepared for this. And if your portfolio is not prepared for a downturn, you need to look at the valuations of what you're buying. So I want the Fed to do the right thing, and I don't believe an interest rate cut is the right thing for now.
And I think, again, it was kind of a little bit of clouded judgment potentially on my part. But if you actually look at the numbers, I'm not seeing, I guess, the reason yet to cut rates.
Yeah.
I don't see the necessity to rush to do so.
Right.
And it's like, oh, we're having a slower housing market. I mean, housing prices skyrocketed.
Yeah.
So it's like if you zoom out and over the long term, over the last 5 years, housing prices have gone up a ton. So it's like we've really distorted the market, and we've gotten people accustomed and addicted to cheap money, which is not good, I think, in the long term. I think they cut rates too fast. I think you're just going to expand this bubble, and maybe it staves off this problem for 2 years, but I think it makes that problem maybe 5-6 years down the road a whole lot worse.